Good morning, traders. It is 8:01 a.m. Chicago time on December 1st, 2015. It's a Tuesday. Happy first day of December. Thanks for joining me. Derivatives trading involves substantial risk of loss and is not suitable for all investors. Past performance is not indicative of future results. A fair amount of news overnight. We had a very interesting pop-up right after the cash close. A little bit surprising, actually. But there was news on the yuan being added to the IMF SDR basket. The SDR basket was created around in the 1960s as a way for different members of the IMF to draw on different currencies. There are four main currencies in the SDR: the U.S. dollar, the Japanese yen, the British pound, and the euro. And now with the yuan being added, it's actually being given a higher weighting than the Japanese yen and the British pound. It's getting a weighting of 10.92% versus the Japanese yen at 8.3% and the British pound at 8.09. And this kicks in on October 1st, 2016. Essentially, what this does is it qualifies the yuan as a stable, free-floating currency. Also, the China November manufacturing PMI came out at 49.6 versus 49.8 expected. This is the fourth straight contraction and a three-year low. Non-manufacturing PMI came in at 53.6 versus 53.1. This is a 4-month high. The Reserve Bank of Australia left the interest rates unchanged at 2% as expected. India's central bank also left the repurchase rate unchanged at 6.75%. The Eurozone October unemployment rate came in at 10.7% versus 10.8%. This is the lowest since January of 2012. There are a bunch of other releases, various PMIs in Europe and so on. I won't go through those. You can look those up. And looking ahead at today, let's. Sorry, hang on one second. Daily calendar. All right. So today, what we have left here is a 9 o'clock ISM manufacturing expecting 50.5, 10 Eastern, 9 Central. Also at the same time, ISM prices paid expecting 40.0 at 8:45, just 15 minutes after the cash open. We're looking for U.S. manufacturing PMI final expecting 52.6. Also at 9 Central, 10 Eastern, we're looking for construction spending at 0.6. As far as speakers, at 9:45, 10:45 Eastern, we're looking for EU speakers, long names. And then at 11:45, 12:45 Eastern, we have Fed Speaker Evans on economy and policy. And that's what we have on deck for today. Let's look at our charts and what we've done, what the auction has said over the last couple of days. So overall, this has really not gone anywhere. So here's the overall picture. Let's reduce these. So we had that drop in August. We consolidated through September, the entire month. Then at the beginning of October, we took off. We made a peak at 21.10 quarter on the December contract, and then we pulled back to 2014.50. And then since then we've come back up, and we are stuck in the 2080 area. If you recall, the 2080 area is a key area, and I'll show you where it is overall. Here's the big picture. Let's clean this up a bit. So Since that 2110 high, we dropped down to 2014 right here on the morning of the 16th. And we've basically come back and are stuck in this high volume area. Remember, this is a big magnet area right here. We've outlined this before. We're stuck in this 2080, and that's where we were yesterday. So the bars that you see on the right of the box here are yesterday's action. I did not include them in the mix so you could see what it was like before yesterday traded. We can extend that out. Oops. We can extend that out to include yesterday's action. And it doesn't change anything. We are in a very, very high volume area. We are stuck in this area. We've tested below and failed to push through, and we're back there. Overall, this is an extremely choppy, this is likely to be an extremely choppy area. We're likely to wait here and build some energy and consensus to move out. So over the last few days, if we just charted what we've done since we've been up here, it's a fairly strong presence here in the 2086 to 2080. So this sandwich right here. Note that yesterday's point of control is right in line. It came in at 2080 and a quarter, which is right there against the 2080 50 MC point of control. So overall, we're just not going anywhere. If you look at the way we closed yesterday, so let's look at yesterday's auction and what happened. We opened on the far upper edge right here. This is the opening price. These green dots. Oops, these green dots right here. We opened right at 2090, which is right against the high of last Wednesday. Note that my charts eliminate all of Thursday and Friday's action. It's removed from the chart. I'm not interested in those days. I don't want them included in the volume profile. So those have been cleaned off for all U.S. products. All U.S. products have had that information deleted. So overall, we open on the edge of last Wednesday's high. We test higher. We put in a high at 2092, and then we roll over and we have a pretty decent push down to 2086, and then we chop around and then we finally basically just test the other side. Right down here, we tested the prior day's low. So we've gone from the high to the low. We've tested the entire balanced range that was left behind on Wednesday, and the market pulls back to the mid. This is a setup here. Pulls back to the mid. This is actually a higher risk setup. It's not ideal because you have what looks like an open auction, and it's pulling back to the mid, and then it finally breaks through the low. Just balances out and then pushes back up through and then back down. It's a very choppy trade. I wasn't here for it. I was traveling back, but overall, very choppy. The thing that catches my attention here that I pointed out in the S5 chat room is the configuration of this low. So we built two distributions yesterday. There's really no balance here. And then we moved the point of control, so you can see this white line shows when the point of control moved and where it was throughout the session. We moved the point of control right at the close, and we have what looks like a pretty weak low. So I basically was saying that this low looks pretty bad. There's no taper on it. It did not complete its auction down here. And therefore the expectation is for it to bounce up on the close, and then I expect it to move lower into the overnight session, and that was completely wrong. But all indications are to that. If you look at the way this delta moved on the close, look at how much volume there was on the close on this 15-minute bar right here. when the point of control was moved, a ton of volume, and then the delta tells us which side was doing the damage, and it was the sellers that were doing the damage. You could see that the delta dropped dramatically. The delta on this bar on the high was 8,700, and on the low was negative 8,700, and on the low was negative 26,000. So there was quite a bit that went off there. 18,000 contracts more on the sell side than the buy side, with the point of control being at the low, with the low being a weak low. This was screaming, sell me, sell me, sell me, sell me, sell me. Okay, so there's you know, the yellow line right here shows the 20-day median for that 15-minute bar. This is a 15-minute chart. You can see it on the title, in the window title bar. It's a 15-minute chart, and for that 15-minute time slot, we expect it to have approximately 45,000. Well, no, we expect it to have 98,000 contracts trade, and we traded 201,000. That's what this is showing. And so overall, I expected this to bounce up as the locals balance their books, and then I expected it to roll over and then punch through and start to move lower towards that gap zone again. And that was the play for today. The overnight session, though, had different ideas. The overnight session ended up immediately taking off and testing higher than the prior day's high. So the prior day's high, yesterday's high during the session was 92. It went to 92.75. There was somewhat of a taper, but it's still not a great high. The session overall overnight is balanced. The low has a nice taper to it. It looks like a fairly strong low. But overall, it pushed higher, and then it floated down from the European Open. It just floated down all the way through, almost back to where it opened, and now it's stuck in the middle. It changes the game plan a little bit. If had it opened back up, pushed down, and then gotten stuck down here, it would give us a better play at a retest of 2080 from below, and then continuation down to 2063 quarter. If you remember, 2063 quarter was the gap zone low. That was the area that we're looking to test the last time we were in the gap zone. You'll see it here. This is the gap zone right here. So we're looking for this, the gap zone from the 10th of November to be taken today, but that's not how it played out. Instead, we are trading up here at 2088, which is the balance over the last few days, and it creates a bit of a conflict. So overall, the expectation for today is for a pretty choppy trade. There's an equal chance that an aggressive buyer might come in here and take it back down and continue this auction lower. There's also an equal chance of a buyer coming in and taking it back up towards that 2110. What I'm going to do today, my plan for today, is to just sit and wait. I'm not going to trigger anything on the open. I'm going to sit and wait to see, do we get a responsive selling push down that then chops around, fails, and then starts to move back up? Or do we get a responsive selling push that holds on, balances, and then breaks through to continue this auction down? Or do we get a responsive selling push and then it continues what it was doing last night? The last night's move looked like it was very much news-based. I did not see any news other than the yuan being included by the IMF. So I don't know if that's enough to push this market up. I know the dollar took a hit yesterday, and gold was up a fair amount. Gold was up, I think by the time I went to bed, it was up 0.7 or 0.8%. So all of those can play out almost equally. So I'm just going to sit and watch and see, do we get responsive? towards the prior day's point of control? If we do we get a base and it starts to take off, or do we get a base and it unwinds downwards? Until then, there's really no way for me to predict what is a higher probability entry from the setup or the context that we have now. We still have not traded this trend day. We still have areas that were not cleanly auctioned down here. So you can see that we've got this 2078.50 LVN that was tested yesterday to the tick. We're back into the FOMC from October. We have a lot going on this week. That's another thing I wanted to cover. This week, tomorrow, we have UK we have Euro CPI, PPI, ADP and Beige Book, Feds Brainard, Lockhart, Yellen, and Williams. Thursday, we have German Services PMI, European Services PMI, UK Services PMI. Then we have the ECB on Thursday. It's a big one we need to look at. There's likely to be a pretty dramatic move from the ECB action. So I'm watching out for Thursday's the big day this week, and on Friday we have factory orders and U.S. German factory orders, U.S. non-farm payrolls. That's the second big release this week. So later in the week we have some important items to account for. Anyway, so that's the layout for today. I want to make sure you know that I was planning to do it today. It's part 2 of order flow, reading, and stocking trades. This session would show a real-time trade that I will set up and take. But it was supposed to be for today. I just got back yesterday, and I'm just not prepared to do something that's really good, so there's no point in me doing it. However, mark your calendar. On Thursday, we will hold that session, part 2 of the stocking of order flow reading and stocking trades. So I'll show how a setup gets put together and what I use to take it. So the invitation for that will be sent out over Twitter over the next couple of days. And if you're on the list at on futurestrader71.com or at stage 5, you will get the invitation for that. Thanks for tuning in, and I'll catch you tomorrow. Take care.